I will be the first to tell you guys the pain is almost over, and we're going to use facts in this video. There is not going to be one opinion here. We're going to use the factual data, the catalyst that we know, to go over when will the pain stop? When will that peak fear be out of the marketplace? So let's get into this video, guys. Hit that like button for me. Consider subscribing to the channel and check out the pinned comment. You have two links there. You have the Twitter link, so go ahead, follow me over on Twitter, as well as if you guys want to stay up to date with all of the trades that I have been making. We have been saving our portfolios over there. Check that out, the link for the buy and sell alerts. So let's get into this video, guys. AMC is down 8.5%. Bad news, Santa Hat is not helping AMC. So that is not a good omen. It could be a bad omen, who knows, but we're gonna rock with it because it is December. But let's get into this on a more serious note. When we are talking about the pain in the marketplace, and specifically with AMC stock. Now, the thing you guys need to know, if AMC was going through this major downtrend and the market was not, that is something to really consider and question. Why is this happening? We know why this is happening. It's nothing to do with the trade on AMC. It's not because apes are selling out. It's because AMC is being very, very shorted at the current moment. Just like mid-cap stocks, just like all stocks that would be hit hard during Omicron or have higher valuations. Now, part of this is due to Omicron, but the biggest thing is actually due to the Fed. So when are these big fear catalysts going to be out of the way? And that goes without saying, like I just said, the Fed meeting is December 14th through the 15th. So mid-month, that's when you're going to see peak fear. I think that expiration week of December 17th, heading into, obviously, Friday is December 17th, you're going to see peak fear heading into this Fed meeting. Because Jerome Powell, he dropped the ball about a week ago. He said that they are looking at basically speeding up the tapering, so stopping putting as much stimulus into the economy and the stock market, to be more exact, the treasury bonds and the mortgage-backed securities. So that made a lot of investors freak out, and I think people are going to freak out until December 14th and the 15th once we get clarity from the Fed, because you always, every single time, you see peak fear up until the fear event, and then after that you do tend to see fears start to die down. Now, the only way I think fear would get worse after that is, say we come to this Fed meeting in December, say a couple days after that they do an emergency rate hike increase. If it's something we can't price in that comes out, that's where you're going to see fear lasting after December 14th and December 15th. Other than that, I see us going through this end of the year rally the second half of December, and I think that's ultimately when the pain will go away. But that's not to say, on Monday we're not going to see a big bounce. That very well could be the case, but I think you're going to see a lot of back and forth volatility over the next about 2 weeks or so. And like I said, AMC is not alone. The overall market is incredibly volatile. The NASDAQ is down 2.55%. That is an insane drop. You're seeing mass liquidations. S&P down 1.33%, and the Dow Jones down over 0.5%. Russell 2000 down close to 2%, whereas the VIX is up 15.74%. So you're seeing just a broad market sell-off. It's obviously not just AMC. So that is a good thing. That should help reassure you guys that it's not AMC. It's not the trade that's failing. It's the market that is quite literally failing. Now, we are getting breaking news right now. Biden signs bill to prevent shutdown as Congress turns to debt ceiling, social spending bill. Now, I think the social spending bill is a side effect here. I don't think that is what's dropping the market. I think it's Fed Jerome Powell. I think it's this Omicron situation, which we will go over. But I do want to talk about the debt ceiling. Now, the government and this debt ceiling situation is going to be from December 21st through January 28th. That is when, at any point, we could default on our obligations. But it's clear across the board. Unlike last time, nobody, Democrats, Republicans, they don't want to default on our debt. So I do think the week of December, December 17th, that's when you're going to get this debt ceiling resolution. I think it's possible over this weekend, and once that happens, you're going to see the markets rebound. Obviously, it's probably going to be after Fed Jerome Powell's meeting, December 14th through the 15th, where you do get that green light to start buying stocks again. But at the same time, you are seeing broad tax loss harvesting that is going on, as well as shorting of these stocks. So there is a lot of things that is really playing into this, but all in all, what you guys can really get out of this video, regardless of anything else, is that peak fear should be over after December 15th. Unless something crazy after December 15th comes out, like the Fed doing an emergency rate hike increase, then I think you're pretty much in the clear, and I think we will see that recovery heading into the second half of December. The first couple of months of 2022, I think, are going to be incredibly bullish overall. So those are the main key things, just to touch on Omicron, because this is really a side note as well. We don't have the key information that a lot of investors want to know, like how well the vaccine is going to work, what is the transmissibility rate, and what is the mortality rate. Is this more fatal? Is this worse than other viruses? I think it's pretty clear, investors and just scientists alike, they don't think it's worse than what we have already been through. But if that does develop, that could be another added level of fear. But Nebraska reports 6th Omicron infection, making it the 6th U.S. state with confirmed cases. So it's not widespread yet, but it's getting to that level. And like I said, the Fed is the main thing that is causing this fear, as well as the debt ceiling. And I would put Omicron as probably the third thing that is causing fear. But since AMC, like I've said, falls in the sector of the economy that is hardest hit if Omicron were to go crazy, spread, and we were to see crazy lockdowns, which I don't think is the case, they are in that sector that would be hardest hit. So I think it's a lot of reasons why hedge funds are shorting AMC, and we see that reflected in the Ortex data, which we're going to get into right now. So the current short interest of free float, the estimate is 17.44%. Now, like I've said many times, back here November 15th, we had short interest of 17.05%. The stock was almost $44 per share. We have fallen a lot since then. So I do think the short interest is probably well over 20%. I don't think apes are selling out. I don't obviously think shorts are covering. Shorts are adding to their positions at a massive rate, and just a massive scale overall. They're digging their own graves, and it's crazy to be seeing this unfolding in front of your eyes. You would think shorts would take this opportunity to cover on their short positions, since we have not been to these levels since the June rally. They're not doing that. They're digging their own graves. So I think that is really good news when we are talking about another big bounce to the upside. Share utilization is sitting at 76.66%. So that's obviously going to be the case as more shares are being shorted into the overall market. So nothing too crazy right there. Shorts are digging their own graves. Now, what you are as well seeing is a lot of puts running into the money. So you are seeing market makers that have to hedge all of these puts that are running into the money. The way they do that, we know, is they short stock on the open market, and that works to the downside, but it also works to our benefit as well. When we do see that big pop and you see these puts run from into the money to out of the money, you see de-hedging, and de-hedging involves buying shares on the open market. And at the same time, you're going to see a lot of shares, in my personal opinion, coming on Wednesday, Thursday, and Friday of this week of December 17th that do start to run into the money. So you're going to see puts getting de-hedged, whereas calls will start to go into the money. So you're going to see these two fronts of buying power from the market makers. And for December 17th, you're still seeing a lot of open interest on this expiration date. You're not seeing people selling out of their contracts. So 285,199 for out of the money calls for December 17th, and then 16,000 calls that are currently in the money. So I do think you're going to see a lot of buying power overall on that week. But the big one is going to be January 21st, 2022. All of the fear catalysts will be out of the way by then. If the debt ceiling situation is not resolved, then I will be completely wrong. But I don't think that's the case, because you will possibly already have defaulted at that point, and you will only have 1 week left from that. And nobody wants that to happen. But we are already looking at 112,000 calls that are in the money, 353,000 calls calls that are out of the money. But more importantly, you're already looking at 62,000 puts that are in the money, 257,000 puts that are out of the money. I don't expect a lot of puts, obviously, to go into the money, but the 62,000 puts that are already in the money will have to be de-hedged for, because we are getting close to January 21st. We're only about a month and a half away. So the theta decay is starting and the gamma levels are starting to go up. So you're seeing some hedging start for the contracts for January 21st, 2022. So I think all of this is going to be very bullish in due time. And just to be honest, in my personal opinion, if you have held on to your shares this long, it does not make sense to be selling at the bottom. A loss is not a loss until you sell out of your position. Obviously, I'm not a financial advisor, so do as you guys please, do as you guys want, protect your own money, but I am personally going to take this opportunity to buy the dip in AMC stock. So hit that like button for me, consider subscribing to the channel, as well as that, as always, check out the links in the description for free stock and the pinned comment for the link for the buy and sell alerts and the link to go follow me on Twitter if you have not already. So that is going to be all for this video. We will be back later on towards market close to give you guys the market wrap and what I see happening for next week as well. So that's going to be all. Love and appreciate you guys. Thank you for watching this video, but I will see you in the next one.